Yes, sir.
Good. So if we want to take like ICT concept, for example, it says that after a liquidity sweep, let's say price was going, this is on an uptrend. Okay. At this point, this was on an uptrend. So we got a high around this area. Then price gave us a low. We got a low here, right? And we have a high at this place. Now, what happened? Price moves up and takes out that high, which is liquidity grab. Once
Yeah.
liquidity was grabbed from the upside, it dropped back to grab liquidity from the downside. So you have a range now, break of structure. Okay. We take a high, now we take a low. This is at the point where there is an uptrend. So you use your fib to measure the range and you look for possible entries at premium zone, which is anything above 50%. Good. Price pushes up to 78.6%, and then boom, it sells. This is just a simple model. But if we are using my or our own developed concept, which is the magic support resistance line, we can find that line around at this place. Let me color it like blue. Good. And if you move back and backtest, you see that at that line or exact price in the past, price has used it as resistance to sell, support to buy, support to buy up. See, resistance to drop. Okay, that exact line. Above it, we buy, below it, we sell. Okay, if you go back, you see that. So this framing of this setup happened around that point. And that resistance line, magic resistance line, has confluence with 78.6%. So this is my optimum or kind of magic entry that I know it doesn't really fail. Okay. The accuracy for this entry is very, very, very strong. Okay. At the exact line, price comes to hit confluence with the 78.6%, and then it buys. In the future, if price comes to hit this area, we will have another sell, but not too big like that. But the moment price closes above this blue line, is going to buy because below it we sell, above it we buy. And why are we going to buy in the future above that blue line? We are going to buy because when this sweep of liquidity happened around the top here, if you look at the candles closed above the blue line. And this is an indication that anytime we go above this area, the bullish people will be in charge. But below that line, bears are in charge, sellers are in charge. Do you understand me?
Yes, sir.
Perfect. So is at the end of the day, all works to the same, like gets you the same kind of results. Okay, so no matter the concept you are using, we are using different things, and but we arrive at the same place. Just that sometimes it depends.
Yeah, well.
Everybody has targets. Now let me show you another thing. Um,
Look at
we
them
have
here, me look around.
we have um we have a swing high, and we get
Why
a
go you go
we get
now back? I want to take this. Give me down. I don't know, but I don't fall.
Salim. We have a swing high. We are going up. We have a swing high, and we get a swing low. We expect price to go and give us another swing high, a swing high to continue the uptrend. But when it got here, it failed. So we call it failure swing. Now, price failed to go up. When it failed to go up and got to this area, let's say it's coming to retest, it should have still gone up to give us a new high. That also failed. Okay, so this order block failed to hold price, to push it up. Okay, so what do we expect? What do we look for now? Okay, so according to is it that one that is called a breaker block or mitigation block? Yeah,
Breaker block.
good. So that you know, this one failed, so this could be mitigation. Maybe I've forgotten the difference, but price pushes down and breaks structure or shifts structure to the downside here. A pullback to where the other block failed is a sell, and it happened. This is typical ICT model. Do you get the point?
Yes, sir.
Good. But I would also say that around this point, buyers were sitting here. Buyers were sitting here. Anytime price gets here, they push it up. Price gets here, they push it up. Now, before even price closed below that place, they pushed it up a little bit to here before it finally look at the body. This is a 15 minutes chart. So for you to have this body, okay, body close here is enough. Okay, see, to know that this is an indication to you that closing below that line, we will go bearish. Now, the moment we close below that line, it means we have engulfed the buyers that are sitting here. So a rate test into the same line gave us a drop for the buy, for the sell. So if buyers are here and they are no more able to push price to the upside, sellers are below them. Sellers take over. This is a sign that anytime price is above this line, it will buy. And anytime price is below this line, it will sell. It's as simple as that. Price come back to that below that. As long as it's below, it sells. So in the future, this is the next area where price will target. And the moment price is below here, is going to sell. But if it closes with body above here, we are likely to just wait for a kind of a rate test and then price will buy. Is it not getting us the same results? Do you get it?
Yes, sir.
So I feel this becomes more simple for me to understand than trying to look for all those bigger names and bigger concepts that or things to frame the setup. So this is more simple, a simple way for me to understand. That's why I'm trying to stick to. But in other words, it's a combination of both liquidity, the concepts of liquidity, the concept of market structure, and also support resistance. Okay. Any other question? Any other question? Okay. So now let me show you another thing. So you see there's consolidation around here. Okay. Anytime there is consolidation, you have to be happy because it's going to give you a good way to frame a very perfect setup. So there is consolidation around here. So what is the, so see where I've put the blue line. Okay. Price trade into that blue line. Below the blue line, we see a sell. Price closes above the blue line, but it engulfs, bearish engulfing comes, brings it below the blue line. It sells. Price hits the blue line. It sells. Price hits the blue line, closes above the blue line, bearish engulfing. It sells. Hits the blue line again, sells. Now, we get a very perfect and real body close above the blue line again here. But when it went up a little bit, it rejects and is dropping. Now, this 15-minute candle hasn't closed yet. Okay, so we can't say that it's going to sell. But with this candle body close above the blue line, it is telling me that this candle is big. So this is an indication to me that we are likely to buy above this area. Even this area, this candle shown it here. The way it's big, okay? So it's likely to tell me that it's telling me that we will buy. Look at here too, above the blue line. The bullish candle is big here too, okay? So, and let's see, this one came down to hit exactly the blue line again and rejected. So the thing is not like try and error or something. No, it's exact, precise things. We're looking at a precise price. Okay, hit it and move up. But we can say here is a fair value gap. All right. Okay, this is a fair value gap, but price hit it, the blue line exactly, and goes up. The moment this bearish candle closes below this blue line, from the below the blue line downwards, it's a sell. This is 51s. It's a sell. Above the blue line, it's a buy. It's as simple as this. Okay, and when we buy from the blue line, our target is going to be the next place where price had sold. Sold off, I think somewhere here, where we got this sell here, somewhere here. Okay, so we expect price to buy up to that place. Okay, but for now, we have to wait for price to close below body with body below before we look for sales. Okay, we have to wait because of how the bullish candle is strong, this one. So we have to wait for a strong bearish candle to close below. If it doesn't close below and keep rejecting, that's all. We are going for a bullish market like that. It's going to break out to the upside. Do you understand?
Yes, sir.
Yeah. So and if it starts selling, below here in this consolidation, buyers were sitting here, price dropped there, they push it up, drop here, they push it up, drop here, they push it up. Now price closes below this line to below here, blue line here, and went up, and then we got like very nice candle, sell candles or bearish candles below here. Okay, so but price rejects off above the blue line, it makes up and then boom, start buying. Now see that price has attempted to come close to the blue line many times. All the attempts keeps rejecting. Okay, so it finally has gone up. Okay, so if price is to drop from, let's say, below this blue line and is able to hit this area above this blue line here, it will give us a buy. Or the moment it closes body below this blue line, it will give the intention or indication that it wants to sell. And with that, we will just expect a small retest on it, and then we find our sell, optimum sell entry to drive price to the next area of interest, which will be somewhere here, like a fair value gap or this area, where price is sat on this other blue line to below here to go up. Below it, we sell, uses it to sell. Okay, uses it, come down. Above it, buys. So the next area will be somewhere here. It might come to close below it, but the moment it pushes up above it, and as long as it stays above it, retests, we are likely to see a bullish market. Are you getting the way it's all adding up?
Yeah.
Good. So this makes it more simple for me, not using like the whole zones, just finding exact line or line of price to frame the setups. Okay, to frame the setups. So
Please, please,
and
can I ask a
it
question?
works. It works. So as long as this candle does not close below this blue line, it will go up. It will buy. It will buy. So if it pushes to close below it, then we will sell. Okay, so let's see how it will end up or what it will bring. Let's see what it will do right now. On 51s. Let me go quickly. Coyote is here, right? Oh,
Yes,
how are you, sir?
I'm very fine now.
Okay. Oh, Oliver,
Please,
what's up?
I even
Uh,
want to ask you a question. Like,
yeah, ask the
what is
question
the
as
perfect,
we switch
the
to
perfect
USD.
timing? I mean, the time frame, maybe 4 hour daily to get
Uh-huh.
this line that you drew.
So for the time frame, you can use any time frame. Okay, you can use daily time frame. You can use weekly time frame. Any time frame. Just like we did last time on Euro USD, you can frame these lines from the higher time frames, even back to the smaller time frames where you take entries. Okay, you can frame it from there. Um, but sometimes, let's say if you are monitoring your trades, like the example I'm giving on 51s right now. This is 15 minutes, and that's what you'll be using to monitor your trade. Okay. So if you'll be using that to monitor your trade, then you can look for these magic support lines um, on it. Just that is going to normally be a lot of noise. I hope you understand what I'm saying. You're going to have a lot of them if you are using the smaller time frame.
What time frame? So the
Aha.
best time would be like 4 hour, 1 hour
Yeah, you can
maximum.
use a bigger time frame to get like two or three strong ones. Then you can play
No.
around them.
All right. All
So
right.
yeah, but where you take your entry around those lines you draw from the higher time frame, when you zoom into the smaller time frames there, you should still be able to get other lines because there will
Okay.
still be support resistance and consolidation or ranging markets around 15 minutes, 30 minutes, 1 hour within the daily time frame or weekly time frame. Good. Let's quickly go to Euro USD and then let me explain what I'm seeing on it. Then we can call it a day for today. So, if you guys remember, with at the our challenge setup that we took, um, let me open a new Euro USD chart. Okay, let me see if I can open it on Deriv. Euro USD, Euro USD. Uh, I don't know why it's not easy for me to locate the Deriv forex pairs on Deriv.
trading view like that. Sometimes when I search them too, I don't see. Okay, so let me see here. Forex, no symbol match your criteria. Let's use the normal trading view. 'Cause I just didn't want to spoil the way I have lined things on it here. But let me go to the daily time frame on Euro USD. So on daily time frame for Euro USD, this is the way it looks. Last time we identified this magic support resistance line below here. I did that with you, Kayode, and other guys. Do you remember?
Yes, I remember.
Good. And then we identified the red line to be a magic support resistance line. So we won't go back to it for today, for now. Then we drew a trend line that is connecting 2 points below here, and we saw that price was on an uptrend. Then we drew another trend line that is guiding or guiding and guarding this move to the upside. So we are still on an uptrend because we are still above that trend line. Okay. So yesterday's news really has caused this whole week's candle to shrink or reject in a very significant way. Okay. After taking out that previous high of this blue line up here, you see, it went up to hit another point up, which I put another line there. Okay. And price has rejected, very significant. But still, we are above the trend line. So we are okay for now. We are still bullish for now. But I want us to look at something. What is the last significant highs or swing highs that we are dealing with in terms of this Euro USD? Last time we look at this pair, we identified this high and this high as the intraday or probably the immediate significant highs that we could play with, though there are other highs above. Why was this high significant? This high was significant because from up here, we got this low, and then price retraced in a consolidation mode to this ranging high around here. Then from this ranging high, price drops back and then takes out these two double bottoms and gave us a new low here. Now, the logic here why we put this red line here is that off here, price bought a little bit, but we got a body close below here, which means that below here, there's a likelihood for sellers to be in charge. That's why we put the red line below here. And above that red line, buyers are in control. That's the meaning of this red line, which is the support resistance magic line. Good. So we have seen price take close below this support resistance line here with a body. Look at the bearish body, and then quickly moves above. So in other terms, we can say price has swept liquidity below here and has moved back into the range and is above the resistance. Therefore, price is buying, which is good. Now, price buys and gives us technically price buys and gives us this high, this first high, and give us this high. Now, after this high, we have not seen any new most current high again. After this high, price only dropped back to retest the red line, which is acting as a place where buyers are sitting, and then rejected off, bought to the upside. But this move was not able to take out this high to give us a new move to the upside. So from here, we have seen that price bought and this time took the low, hit where the buyers were sitting, closed below it, retraced back up, closed below it again, retested that line a little bit here. And then from there, we saw a sell. This move that happened here is an indication to us that below this red line, price will sell. Above the red line, price will buy. Below the red line, price will sell. This is the indication. So in the future, anytime price comes below this red line, we should expect sells. That is the logic. Good. Now, so the most recent high that gave us that indication that price will sell below the red line is these guys here. From these guys, price took out previous low and also a previous low area here. Therefore, we have a valid range. We have a valid range because of this break of structure. So we can use our Fibonacci to measure the range. We measure the range, and where are we going to naturally expect price to come before we buy? We sell. We expect price to come above 50%. Price gave us 50% first, dropped down, and swept the 50% out, and gave us 78.6%. At the 78.6%, we should be looking for any magic support and resistance price or area. If we find confluence with the 78.6% and a magic support and resistance line, then we are likely that as long as we stay below the 78.6% and the magic support line, price can give us a sell. Now, we have the blue line up as a magic support resistance line. The next blue line also below here as a magic support resistance line. Price hit 78.6%, and currently we have seen a very big rejection because of the news. If we get a trend line break or close below, that will be another confluence. So my bias now is that though we were expecting or looking for a buy, up to like 100% of this range, at the 78.6%, this reaction that is happening, if it continues to hold, and this is where I go to the daily time frame. So this is how the daily time frame is showing. If this continues to hold and we get that break of structures we need here, we are likely to have a major pullback. And the major pullback to somewhere equilibrium or 38.2% of the whole move to the upside. You see where the red line is, and you see where the 50% is. Okay, we are likely to have another retest or a third touch of the trend line. We have 1, 2, the third touch, or we are likely to have just a drop to 50%. So now, what am I going to look for? Everybody might be looking for buys because we are bullish. But according to this concept and the evidence that I'm showing you guys, if we get more confirmation, we can frame a sell setup. Okay, and we'll be safe and not be looking for buys again. So from the daily time frame, now we are working around 78.6% zone, which is in a premium zone of the range we measured, and we are below magic support resistance line, which is the blue lines. Below those lines, we should sell. Now let's see, below this first blue line here, there was a sell. So if price comes below that same line again, are we not going to see sell? Mr. Coyote, I'm asking you. It's likely we can see sales because below that, price hit sold. Now,
Yes.
we close above it here, which is an indication that we will buy in the future when price goes above it. But what if price doesn't go above it again and we are below? Sell. And
Yes.
now price also hit above here. We hit another support resistance magic line. If you trace it back, you see that anytime price hit that blue line, it sells. Below it, sell. Above it, buy. Below it, we see sells. Above it, buy. It cuts through it. Even price uses that blue line as support to buy. It comes to drop on it and buys. So we are likely to see a sell.
If it closes below the red line, it does not sell.
Yeah, and if